in a development that could significantly alter the trajectory of the Ripple versus SEC legal saga. Both parties, Ripple Labs and the U.S. Securities and Exchange Commission, have made a rare joint request. They've asked the U.S. Court of Appeals for the Second Circuit to continue holding the SEC's appeal in abeyance. In plain terms, they've asked the court to press pause. This request not only signals ongoing behind-the-scenes negotiations, but also adds a new layer of complexity to a lawsuit that has already spanned years and captivated the global crypto community. Let's break this down. The term abeyance in legal parlance means a temporary suspension or a delay of a proceeding. And in this case, the SEC and Ripple are essentially telling the Second Circuit, hold off a little longer. We're not done resolving issues in the lower court. This isn't just a procedural footnote. This joint move tells us several things at once. First, it's an acknowledgement by the SEC that the situation isn't yet ripe for an appellate decision. And second, it's a strong signal that Ripple and the SEC are trying to reach some form of resolution, or at the very least, are still in active discussions regarding key aspects of the case, including potential penalties and injunctions. More specifically, this relates to the pending remedies phase currently underway in the Southern District of New York under Judge Annalisa Torres. That phase is focused on determining the appropriate consequences for Ripple's past sales of XRP, which were found to be unregistered securities offerings to institutional investors. The SEC has proposed a $2 billion penalty, while Ripple has countered with a much lower amount, arguing that the penalty should reflect their partial victory and current compliance posture. The fact that both sides want to keep the appeal on hold until at least August 15th, when the SEC is scheduled to file a status report, shows that they expect more clarity in the weeks ahead. It suggests that critical developments in the remedies phase could determine whether the SEC proceeds with an appeal or decides to drop it altogether. Crypto legal experts are already weighing in. Many, including pro-XRP attorney James K. Fillon and former federal prosecutor John Deaton, see this as a tactical move by both parties. For Ripple, it means buying more time to negotiate a settlement, without the overhead of appellate litigation. For the SEC, it may reflect a realization that rushing into appeal without firm ground could backfire, especially given the growing scrutiny of its broader enforcement strategy in the crypto space. The August 15th status report is now the next big date to watch. The SEC will be required to inform both the court and the public on the status of the case, whether discussions are still ongoing, whether a settlement is nearing completion, or whether litigation is set to proceed full force. Until then, everything is in a kind of legal limbo. But this limbo isn't without meaning. In fact, it's filled with potential. Ripple has made significant strides in expanding its partnerships, rolling out on-demand liquidity corridors, and preparing its XRP ledger for tokenized real-world assets. Institutions are watching closely. Banks and financial services providers that were previously hesitant to engage with XRP due to regulatory uncertainty may now begin laying the groundwork for adoption, contingent on the final outcome of this case. Let's also not forget the political and regulatory backdrop. The SEC is under increasing fire from lawmakers who view its aggressive crypto enforcement as overreach. If the Ripple case ends in a muted settlement or a limited penalty, it would represent not just a victory for Ripple, but a potential pivot point for crypto regulation in the United States. So what's really happening behind closed doors? Are Ripple and the SEC quietly reaching an understanding that could end the case for good? Is the SEC beginning to rethink its strategy in the face of mounting pressure? Or are both sides simply treading water while they prepare for the next round of litigation? We don't have all the answers yet, but the joint request for abeyance and the August 15th deadline provide a narrow window into the delicate dance unfolding between two titans of the regulatory and crypto arenas. What we do know is this: XRP's fate, and possibly the shape of crypto law in the US, hangs in the balance. And with every court filing, that future comes into sharper focus. For XRP holders, this moment is a time for vigilance. The months ahead could define not just Ripple's legal future, but the mainstream viability of XRP as a global payment solution. Whether this pause leads to peace or escalation, one thing is certain: the Ripple SEC standoff is entering its most decisive chapter yet. Asterisk, it starts with a number $19 per XRP. To the untrained eye, that figure might seem random, ambitious, outlandish, even. Asterisk, but behind it lies a precise set of calculations, data models, adoption metrics, and global financial infrastructure shifts. And if this forecast proves correct, we're not just looking at a price increase, we're staring at a monumental surge in market cap to the tune of $763 billion. The kind of number that doesn't just change portfolios, it changes narratives, changes industries, changes who controls the flow of global value. The analysts behind this prediction aren't hype merchants chasing social media clout. These are institutional minds, former Wall Street strategists, crypto economic researchers, and veteran fintech insiders who have begun recalculating the future of value exchange. And at the center of those recalculations stands XRP. Let's break down what this number means, and more importantly, why now. Right now, XRP trades for under $1. But under the surface, there is movement massive, strategic, and largely invisible to retail eyes. Ripple has quietly secured partnerships in over 55 countries. Over 300 banks and financial institutions are already connected to RippleNet. XRP is being used as a bridge asset for real-world liquidity corridors. And now, with regulatory clarity in the United States following Ripple's legal victory over the SEC, the dam that's been holding back institutional adoption may finally be cracking open. Because here's the thing, XRP was never designed to be another meme coin or a weekend flip. It was designed to solve the multi-trillion-dollar problem of global payments. And that's the foundation for this new $19 price projection. It's not hype, it's math. According to analysts, if XRP captures even a fraction of the global cross-border payments market currently valued at over $150 trillion annually, the price must rise to match liquidity demands. At just 10% market penetration, with a significant portion of value routed through on-demand liquidity, ODL, the models begin projecting an XRP price between $8 and $19. Why? Because XRP isn't used like Bitcoin or Ethereum. It's not held and forgotten. It's cycled, used, moved, and recycled thousands of times a day like a ferry that shuttles value across the ocean of global finance. And when you have that kind of utility velocity, you don't need to move trillions in market cap overnight. But the value still accrues because demand skyrockets while supply remains fixed. That's where the $763 billion figure comes in. If XRP hits $19 per token, that puts its market cap at nearly $750 billion. It would make XRP the second most valuable digital asset on Earth behind only Bitcoin and would officially confirm that Ripple's infrastructure is being used not just in theory, but in practice across the globe. But here's where it gets even more fascinating. The analysts predicting this price surge aren't just looking at crypto charts. They're looking at macro trends. The decline of SWIFT's efficiency and rise of ISO 20022 compliance systems. Central banks openly testing Ripple solutions for CBDC interoperability. The ongoing collapse of trust in traditional fiat systems. The shift toward asset tokenization, real estate, stocks, even commodities being bridged via XRPL. These are tectonic movements, and they all point to the same reality. There's going to be a bridge. A liquidity layer that connects all these siloed value systems. And XRP was engineered to be that bridge.